Welcome to the Uncontested Investing Show, presented by REI Inc. magazine and sponsored by RCN Capital. Each week, we focus on bringing you candid convos from the best in the biz. Here's your host, Tim Herriage.
Welcome back to the Uncontested Investing Show. I'm Tim Herriage. Thanks for stopping by. Today, Logan Fullmer is with me. Logan, how are you?
Great. Good to see you today.
Man, it's good to see you. So Logan's someone I've been watching on social media lately. You're putting on these big seminars that aren't the typical seminar. Like, it's really just to teach people, which I find interesting. So why don't you just take a minute, say hello, and just tell people a little bit about yourself.
Great. Well, I'm glad. Thanks for letting me come, man. This is fun. I really enjoy doing this stuff, and it's kind of become part of things I've done over the last few years. You get busy working down your lane, and it's kind of neat to share and find out what else is going on. So here I am. I do some educational stuff. I've kind of been anti-guru, anti-real estate education because there's kind of a bad name.
Right.
But I do have a very unique component to my business, and it always blows people away. And I've spent more and more time talking to people on the phone, giving advice, just sharing the information online. And I've just gotten literally hundreds of people asking for this content. So after a couple of years, I finally decided if I can do this, make a little bit of money doing it, but deliver what I think is the best amount of information I can, I'll do it. So I do have, it's curative title work. And this is stuff nobody cares about, except for when you can't close a deal, title company says, look at your schedule, see, blah, 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 blah. You got to fix this. It's either simple, title company might help, you got to call a lawyer, or even the attorneys throw their hands up and like, So that's when I show up.
Right. So I've seen some of your deal numbers, and we're going to get into that in a little bit. Because some people, they're like, title work, but
why do I care about title work?
Right.
You want to buy property at 10 cents on the dollar? Now you care about title work.
Yeah, everybody cares at that point.
Right.
So one of the first things we do every week is we do what I call the bluff, the bottom line up front. And what that is I learned it in the Marine Corps. I used to brief generals, and they always said you had to give them the bottom line up front in case there's a mortar attack, or in case they have to just get up and leave the room because, generals get busy. So what I like to do is I'm going to give you 2 minutes. Take 2 minutes and just tell the audience kind of the most important things they should be doing, looking at, watching, trends they should be following, just kind of the most important things that in your mind people should be watching in real estate today. So 2 minutes, you're on the clock.
One of my favorite things to tell people is your profit margin is also a convertible margin of safety. I've never heard anybody say it that way, but that's how I think about it. And when I go into a deal, what's most important is to say, how am I going to lose my money? How am I going to risk principal? That's the first rule. If I can measure all my risks and attach dollar amounts to them and decide that I'm not going to lose any money, then I realize, okay, there's an investment thesis here to build on. From that point, we start talking about maybe making some profit. How's that going to look? What are the risk components? Can we afford it? All these things. But it's looking at the margin of safety and the profit margin, which really are the same thing. It's profit when things are going well. It's margin of safety when things go bad. And it operates together. I look at that with real estate businesses. I look at that with other businesses, food manufacturing, liquor businesses, other operating businesses we own now. And it came from our real estate.
You're an attorney?
No.
No?
No.
Okay, so how can you be smart enough to do curative title work without being an attorney?
Well, I didn't think the way folks do that do a good job in formal education. So I struggled in school big time. But I
think that's the most common thing of our guests.
A lot of entrepreneurs.
Right.
Yeah, I did bad in that format. It took me 7 years to get a bachelor's degree. I got bad grades in high school. Anyway, I spent a bunch of time I run into problems, and I didn't like the answers to those problems. And I have kind of that bullheaded attitude of I'm going to fix this at all costs. I had to learn as I got older that all costs isn't always the answer, but you can really go deep. So I spent the time paying lawyers to teach me how to read the property code, the estates code, the tax code, and the probate code, and then taught me how to research case law. Once I realized that's where these answers would come from, that's where I started digging. So every time I'd have a problem, I'd go figure out how to solve it and then hire an attorney or attorney team and say, all right, guys, I need y'all to litigate this. Here's how we're going to do it.
So you mentioned something earlier to me about the oil fields.
Yeah.
So were you solving problems out there too? Or?
No, dude, I was trying to make a living. I had just mediocre jobs. And a buddy of mine from college, I was in a tough spot in life, trying to figure out where I was going next. He calls me and said, do you want to come make $100,000 a year? That's more than double than I ever made in my life. So the next Monday I was there with my bags in my truck, right. I'd abandoned life. So I spent 5 years working out there, and that was a life-changing experience for me because I started managing small projects and started to manage large, 20, 30, 40, $50 million construction projects for infrastructure construction, pipelines, stuff like that.
Right.
So that was a huge was a huge deal. But that's how I came from the oil field. I started doing real estate shortly thereafter.
So I see land development, building houses. You just showed me your kicking office there in San Antonio.
Yeah.
Talk about the evolution. Like, I mean, you came out of the oil field and then all of a sudden owned $100 million worth of real estate.
Not yet, not like that.
Well, talk about kind of the evolution and the progression.
So when I was working in the oil field, early on in life, I'd inherited a little bit of money. And I thought, oh, great, I'm rich. I'm going to flip some houses. I'm going to do some cool stuff. I didn't do a good job with it, and I ran out of all of that money. And at that point, I'm like, crap, I have to get a job. I hadn't worked in 2 years at that point, just those kind of listless things. So I get the job in the oil field, start making real money, but I'm earning at this time. And I remembered how fast it went, and I thought, I'm scared I'm going to lose this again. I can't let that happen. So I'd live in the RV in the man camp and literally save everything after paying my taxes. For 2 years, I didn't spend a nickel on myself. But I started to see some growth. And at that point, I thought, all right, I don't want to risk this capital. And that's what my investment thesis of never risking principal, which is what a lot of the Wall Streeters have as their number one rule, was so important to me because I've been poor before. Right. I'm going to be poor again, so I can't risk my capital. So I started to look for opportunities. And I got a couple rent houses. They did good. And I'd go work for a couple, 2, 3, 4 weeks in the oil field. And then I'd come back to San Antonio because that was the big city that was near me. So I'd come work there for a while. I found these little vacant lots that are they're selling for between $3,000 a piece. And then you could get at the house up to $20,000 a piece. So 3 to 20. So I'd go work for a month and a half, come back, buy some real estate. Go work for a month and a half, come back. Got to the point where I had a couple dozen of those. And then I'd invested about $300,000. That's about all I'd made in those. I was able to save in those 5 years.
Right.
And I got a call from this realtor. The real oil field was starting to get shaky, 2014 range. Right. And this realtor calls me and says, my client wants to offer you $200,000 for that lot. And I'm thinking, I got $300,000 in all of them, 2 dozen. I'm about to get my original investment almost back. And that also tells me the market's moved. I didn't have a clue. I've been laying pipelines, buying. I'm not even looking at the market. I'm buying this stuff, knocking on doors. So that was the big game changer that said, man, I'm onto something here.
Right. So you probably end up with $3-4 million worth of real estate thinking that, you're just like, I got my $300,000 and it's protected. I'm not going to lose it.
Right. And exactly did what you said. So not too long after, I started going to do some flip houses and going to the foreclosure auctions. And I'm going to my office in the oil field business. Since then, I'd moved in the office in San Antonio. So I go in there and shut the door and go, I'm looking for real estate deals, calling title companies, like doing work. And then I have to go have a meeting for the oil business and then come back.
Right.
And then one day, this guy that I hired to help me, I was so aloof to what was going on. They came in and had him fire me. And that was when I thought, okay, I just sold that lot. I got a couple bucks. I can live for 2 years without making any money. Let me go try to make a living in real estate.
And here we are.
Here we are, yeah.
All right, so we're going to take a break in a minute, but what are a couple things we're going to talk about later?
I think we're going to talk about curative title work. Yeah. Folks want to get good deals, good market, bad market, whatever. What are you going to do when the market changes? All this stuff doesn't matter if you have figured out how to buy property at extreme discounts. None of that matters. Everyone is telling me recently, what happens when the market crashes? What are you going to do? I'm not going to do anything. I can't sell these properties for 100% of fair market. I'll sell them for 80%. But if I'm buying them for 30 or 40%, nothing changes about my business.
Well, I can't wait to learn more about that. So stick around. We'll be right back.
Are you looking for fast funding for your next fix and flip? What about leverage for your next long-term rental or vacation rental? Need capital for a new construction project? Look no further. RCN Capital has you covered. As the leading nationwide lender for real estate investors, RCN Capital offers short-term and long-term financing solutions for your next investment property. RCN Capital takes a common-sense approach to your loan request, offering high leverages and low rates backed by superior customer service. Whether you're investing in single-family properties or multifamily properties across the U.S., RCN Capital has funding options for you with no hoops to jump through and quick closings in as little as 2 weeks. Ready to get a quote for your next investment property? Visit rcncapital.com/podcast to apply today. There is no fee to apply. Again, that's rcncapital.com/podcast to apply today.
Welcome back to the Uncontested Investing Show. I'm Tim Herriage. I'm here with Logan Fullmer. Logan, you, before the commercial break, you told me that I could buy houses for 30 cents on the dollar.
You can.
Is that today's dollar? Because inflation's kind of been a little wonky lately.
I don't really look at today's dollar because when at that kind of a discount, it doesn't matter.
All right, so let's talk about it. Aunt Mary leaves the house to Susie and Jane, and Aunt Mary was married 5 times, and nobody can tell us who owns the house. That may be too complicated.
Well, that does happen.
That
does happen.
After 20 years in this business, right? We've seen it all.
Yeah.
But there's a lot of deals that you hear about, and you're so busy with other things, and we tend to walk away from them. So why don't you just lay the groundwork for some things that people can maybe be on the lookout for that would tell them there was opportunity there?
Usually the best opportunities for me are when someone is talking about a deal that they try to sell it multiple times. Realtors will call, title companies. I get local judges and attorneys call, just anybody in the real estate field, wholesalers that say they've been trying to sell this forever and they can't. That's usually the calling card for why can't they? Because if I can solve the can't, then I got something there.
Right. So what are some of the reasons they can't?
Just what you said earlier was I call those unresolved or orphaned estates. Judgments and liens that are showing up on the Schedule C, the title commitment. You've got breaks in the title chain. When you bought your house, let's say that deed didn't get recorded, but you went and sold it, before they're doing the way they did title insurance and all that now. But before then, so you gave a deed to the next guy. Now he owns it. Well, that's missing a deed. So there's a break in the title chain. That's got to be resolved. That's another one. You've got unreleased mortgages, deed of trust, security instruments, things like that. Those are huge.
So let's talk about that. If someone owned a house, let's just say before the 2008 financial crisis, and that lender's no longer in business,
right?
How do you track those people down?
Man, I stumbled across this because I was irritated one day because no one could give me the answer. I figured this out 4 or 5 years ago. I got on Google and I fixed the problem literally on Google. A lender had made a loan. It was we thought it was transferred, but there was no transfer filed in the land records when the 07-08 crash deal happened. So I looked them up on FDIC website, and it looks as a federal site, and it looks like their assets were forfeited and they were not assigned to a new lender. What that means is the bank is out of business. I don't know why, but assets weren't assigned. So there's no one that can make the claim for that unpaid mortgage. There's no person that can make that claim. So I take that, print it out, take it to the title company and say, you should feel comfortable writing title on this because you will know that no one will ever come claim that mortgage because they were forfeited in 2008. And they're like, all right, I'll take it off Schedule C.
Yeah, but that's got to be like a shady title company, right? Not like Fidelity or one of the big guys.
Yeah.
All right, so
think about this for a minute. A lot of people miss this part. Title company is about risk. It's about a known risk that's happened in the past. Every other kind of insurance we have is about formulated, calculated, potential kinetic risk.
Right.
Guy got a DWI, he might get another one, right? Jack his rate up. We know what the risk is here. We know there's a break in the title chain. Okay, we're not going to insure that because someone will probably make a claim on that.
Because you're insuring the past, not the future.
Right, because it's more known, there are more facts. So when you're telling me, hey, this bank has been forfeited for 15 years, you think someone's going to open that bank up, go find the 15 assets that they screwed up on, and then come sue you 15 years later? That ain't happening. So when they realize there's no risk, that's all right.
So we find 123 lender XYZ. Do we just go all of a sudden start searching the tax rolls for the title records for every lien they still have and just start chasing those houses?
That's an interesting idea. I've not done it that way, but
should we leave here now and get we'll just stop the recording?
Right.
And just
I thought of that. Yeah,
that's interesting. Let's talk about the old 3 people inherited the house and 2 want to sell. How do you fix that if one says, no, I'm staying here forever?
So I normally find that the toughest, meanest person is the one that ends up in the house. If you're in that situation, they throw everybody out. They say, get lost. Not often are they the most responsible. They're not usually paying their taxes on time. They're not maintaining the house. It's rare that you find a beautiful palace all paid up and the person owns 1/3. It doesn't happen like that. So you have a lot of problems. You usually have legal issues. You've got title problems. You've got delinquent taxes. You got deferred maintenance. So when that happens, there's a section in the Texas Property Code, Section 23. It's partition of real property. So that is an absolute right in Texas, and the judge will order that to be sold, even if it's a homestead, even if it's not, whatever reason. There's no protection to prevent Section 23 from selling it. Now, if they're heirs, if it's not 2 people, maybe me and you go buy a house together, we're just co-tenants. But if it's heir co-tenants, there's Section 23A of the Property Code that was amended in the last 3 years maybe, and that's under the Uniform Partition of Heirs Property Act. That's a partition of heirs property. So that one has a little bit more steps, right? But it's still an absolute right. You will still sell it. So if you were to buy interest from a couple of those people and then go to the last person and say, let's work this out. You've been taking advantage of them for a long time. Let's cut a deal. And you're reasonable 70, 80% of the time, 90% of the time, you can cut a deal. The other 10%, you need to file a lawsuit. Judge will sell it and y'all split the baby.
We can't be splitting babies on the show, Logan. But all right, so I go to air number 1 and 2 that are reasonable,
right.
or that maybe
they're probably frustrated because they've been getting beat up for a long time.
Right. So I just like write them a check. Like, do I get a deed from them? Do I go to a title company? What's the step there?
So I tried to buy those through title companies early on when I encountered some of these problems. Title company will not insure undivided interest. They'll only insure a whole interest. So the problem is you have to buy it for cash and you can't get title insurance. So you're going to do, in our office, we do them ourselves a lot of times. We have some attorneys that do them for us. It's an opinion of title. You're going to run your title abstract and you're going to issue your opinion of title, who the owners are and why. And you're buying that way. You're not getting title insurance.
Right, so you got to have some cash to do this.
So that's an interesting point. You can't use debt for these kind of deals. No.
All right. So, as the executive director of RCN, I don't like those deals. No, I'm just. All right. So,
well, I'll tell you what you would like. Once I'm done with these, I go sell them and they're insurable. And I would say 80 or 90% of the buyers, they're buying ranches, commercial offices, flip houses from me. They're all coming for debt. Every one of them.
Let's talk about judgments and liens. Well, let's talk about a judgment for a credit card.
Yep.
How do we take care of those?
First thing I do is look at it and say, is this the exact same person? Just because it says John Rodriguez, that might not be our John Rodriguez. Half the time, those will come off by the seller signing an affidavit of identity saying that's not me, different number, different social, whatever. That's half the time. Another time, we'll look for errors or mistakes on it. Sometimes you can get it stripped that way. Sometimes, those judgments and liens usually only hold up for about 10 years. So title companies put those on your Schedule C, but I always look at the date it was recorded first. And the first thing I say is, dude, this is 15 years old. Okay, we'll remove it. I'm like, why'd you put it on the beginning? There are a lot of deals I find that are clean, but title just put that crap on there. And someone calls and says, this deal's a mess. It can't sell. Do you want to buy it? I'm like, yeah, I want to buy this because I see it right there.
Yeah, because
title won't suggest that.
I'm guilty of that. They send me the Schedule C. I see a lot of junk on there.
Yeah, and I'll call the attorney. What are we going to do?
I don't even look at the source documents, right? And that's interesting.
So they'll come off that way. But another thing is, once that thing is a couple years old, those creditors will take pennies on the dollar, except Toyota Motor Credit. If they're listening to this, they should be proud because they have incredible debt collectors. Nobody settles with them, but everybody else will settle for a really good deal.
I heard Amex is that way too.
I haven't done much with Amex. No, I don't know, but maybe wouldn't surprise me.
So liens, I was telling you earlier about that house I bought in San Antonio. We had bought it, and there was an old lien from someone that had done it was a mechanic's lien on a roof.
Yeah.
They're out of business.
Yeah.
Can't find them. And it was one of those nondescript names. Like it was like, Tim, it was like Tim Smith, right? It's like, oh, great. We can't find Tim Smith either. How do you get those to go away?
Lawsuit. Yeah, a lot of times on something like that, those aren't expensive. Most of the time, those are going to be default judgment. You're going to file yourself a $2,000 petition. I wouldn't go into spending a ton of time making it really strong. I just get a statutory case law. I don't know whichever one it is for that cause of action. File the thing. You probably get a default judgment. It costs you $3,000. I'll take you 3-4 months to get it just because of the timeline.
Oh, because you can't find them.
You can't find them. You're going to have to do alternative service, which is publication by citation probably. Right. And then, so sometimes the title company won't want to insure a non-personal service judgment, a default judgment like that. They won't insure it for 4 years after the judgment because there's the timeline statute. Yes, now statute of, how do I not know that?
You know it, you just can't remember.
They can appeal that. So sometimes title company want to wait 4 years. Sometimes the title company look at the facts and say they've been out of business for 5 years. You did good service. All right, it's fine.
What about when everybody's getting along and they want to sell, but there's the black sheep of the family that no one can find? What do we do about that case?
I ask myself that a lot. I got a guy as a PI in my office now. So that's how we find those dudes or gals. And we found people under bridges. We found people in shelters. We found people in Peru, Canada on vacation, Switzerland. They're everywhere. You have to do some serious resource digging. But that's usually the linchpin. That's the last person. Everybody else is ready. We've done deals for 20 owners, and they can't find the last guy.
Right.
So I go ahead and tell them, I'm going to spend some heavy resources. I'm going to be hiring 2 private investigators in Peru to go find this dude, because y'all think he's there. But if he ain't there and they got to go to Guatemala, we're paying people over there. This could get real expensive. So that's where I make my business case for this house worth $100,000. We all know that. Y'all been trying to sell it for 80. It doesn't work. I'm going to give you $30,000, dude. I'm sorry. I might only give you 20, but I don't know what's going to happen on this.
Right.
I give them 20,000 cash. I'll buy their interest and I'll go looking for that dude.
Well, that's good. So when we come back from the next break, we're going to do the money minute and then rapid fire. So you got to be thinking you're going to have 60 seconds when we come back. You got to give you got to really riff it. All right.
Rapid fire is what? You hit a question I had an answer?
Oh yeah.
Okay.
All right. We'll be right back.
Are you looking for fast funding for your next fix and flip? What about leverage for your next long-term rental or vacation rental? Need capital for a new construction project? Look no further. RCN Capital has you covered. As the leading nationwide lender for real estate investors, RCN Capital offers short-term and long-term financing solutions for your next investment property. RCN Capital takes a common-sense approach to your loan request, offering high leverages and low rates backed by superior customer service. Whether you're investing in single-family properties or multifamily properties across the U.S., RCN Capital has funding options for you with no hoops to jump through and quick closings in as little as 2 weeks. Ready to get a quote for your next investment property? Visit rcncapital.com/podcast to apply today. There is no fee to apply. Again, that's rcncapital.com/podcast to apply today.
Welcome back. Tim Herriage. I'm here with Logan Fullmer. Logan, it's time for the Money Minute. So the Money Minute, you're going to look straight in the audience's eyes and you're going to tell that younger Logan, that Logan that had to go to the oil field, you're going to spend 60 seconds teaching him or telling him or sharing with him what he needs to know now and needs to do different. You ready?
Got it.
Money Minute. Let's go.
Logan and everybody else out there that's in that exact same spot that I was when I went to the oil field to try to figure my life out, what's important that you know is everything is going to be just fine. You care. You're a hard worker. You're very interested in this and you're going to go. You're going to work. You're going to do everything they tell you to do. You're going to be a servant. You're going to be helpful. You're going to care every moment of the day and you're not going to argue. You're not going to complain. You're going to learn to do exactly what it is they want. What's going to happen is you're going to start to get better self-esteem. You're going to start to learn how to operate with other groups. You're going to start to save money because you're not going to be an idiot with your money. And as you get through that process, you're going to grow exponentially here. But along that way, you're going to be making the strides. You're going to become the man that you always thought you wanted to be, or who you were, but you just didn't know it. You're going to become that person. That's why you're going to the oil field or any other place like it.
You know,
that was really a special time because I was nervous. I was worried. I didn't have a lot of self-esteem. I just made some major in life. And that was the one time where nobody knew who I was. I showed up, my shirt tucked in. I got this new haircut, no more spike. And I covered up my tattoos with long sleeves. And I said, yes, sir. No, ma'am. I'm going to do whatever these people say when they want. Just like you went to the Marines, you're like, yes, sir, I'm here. Right. I did exactly that. And dude, but I was there for 4.5 years. I started $80,000 when I started. When I left, I was making $200,000 a year. It was a manager level position. And I was a junkie who spent his retirement before I went to the oil field.
We're going to be bleeping this guy out a little bit.
Dude, that was a life change. I'm sure you came out of the military and were like, different man.
You know, I wasn't.
Really?
It was such an adaptation phase from having someone to tell you what to do all the time. And that money was coming every other week.
Yep.
Right? They don't teach you how to pay your bills. I mean, my credit went in the dumpster. And I mean, it really was. It was the 2 years out of the Marine Corps were the worst for me.
Really? Right after you got out, you were trying to figure it all out again.
I was trying to get back in. And then 9/11 and yeah, because
like a prisoner who doesn't know how to operate in the real world.
Right. Yeah, it was wild. So I tell my kids that all the time, right? And I've got a 21-year-old son. We're going to get into rapid fire in a minute, but it's important that everybody out there knows you don't have to know where you're going.
No,
you just have to be going somewhere.
I tell people all the time, what do you think is the best advice and whatever? Like, man, I don't even know where I'm going sometimes, but I know that I wake up in the morning and I don't really know what's on my activity list, but I go do a lot of stuff and I stay busy and I work hard and I think things through and I try to affect change in our companies. And dude, it just keeps getting way better.
You know, and so my 21-year-old son, I was sharing with you earlier, he went and played college football, dealt with some injuries, decided he wanted to transfer to Oklahoma State. Thought about walking on, But then he started flying because he thought he would be interested in it. And he loves the idea that you only have to work 10 days a month as a pilot. And I don't want my kids in real estate.
Oh.
I don't. This business is hard.
So that's true.
It's done a lot for me and my family. But I want them to be more fund manager type mindset. I want them to learn kind of that make their money work for them quicker than I learned how to,
Yeah.
Because I'm 43. The first 35 years was just trying to, what do they say on the street? Make that bag, right?
Yeah.
Really just trying to make it, trying to figure it out. And I tell people all the time, I've been the guy that was at the AT&T store, waiting for it to open so I could go pay my bill to get my phone turned back on.
Yeah.
And that was the 2 years out of the Marine Corps. Like, they don't teach you to pay your bills. They don't. And so, I think that I really like what you said, right? Like, believe in yourself, keep moving. I tell everybody, like,
it really is going to be all right. A lot of people just don't know that until it is all right.
Right. Well, all the success stories have a failure in the way.
Yeah.
And I think as we look, I told my son, you're on a journey. You just have to decide where you're going and start going. And you may be heading towards San Francisco, and you may get to Denver, and you may go to Jackson Hole, and you may get to Jackson Hole and decide you're going back to Chicago.
I like that you're supporting him on that now, because when I was a kid, nobody told it to me like that, and I had to figure this out by my mid-30s. Well, what's neat is you're telling him that, so at least he's got the concept.
We spend a lot of time in our 20s beating ourselves up.
Yeah.
Because we think we may see those people that we look up to, and they've got it all together. Right. And like I tell them all the time, like, you don't want to be me. You want to be where I am now.
Right.
Right. You don't want to ever go through what I went through.
Yeah.
You just want the easy button, right? And life's not a commercial. So, rapid fire. Biggest mistake
Biggest mistake.
in the business, I should say.
Biggest mistake in the business is not giving enough respect to risk. There's several times where I lost massive. I lost 54 grand on one deal. I lost another one smaller, but those affected me hugely. I'm glad I did it because I learned a ton, but I didn't respect the risk. I was just looking at the profit. I forgot about the risk.
Right. So what is the most you've ever lost in the deal?
I lost 54 grand on one deal, 70 on another, and 80 on another.
I don't trust anyone that would ever sit in that chair and say, I've never lost money.
No, that's not true. But I'll tell you, I've done that, but I've also made over $1 million on a single deal. So it's gotten to the point, those 3 deals, one of them happened early on, 2 of them happened last year. They're litigation strategy deals that got to the point where I could still win them, but I knew I was gonna have to bury a ton of capital. And the biggest problem was more my time. And I walked back up to the table and said, hey, y'all, I'm sorry, I picked this fight. I'm gonna give y'all what I got out of this deal. I'm gonna give it to y'all, and I'm gonna give you all those other taxes and all those other things that I paid as a gift, and I'm out.
Right.
And they were blown away. They still can't figure out to this day why I did a business decision. My dollar per hour is plummeting, and I had great deals sitting here on my desk waiting that I was fooling with that.
Too many people don't value.
So I made that decision.
No, but too many people don't value their dollar per hour. Right. So time value of money. Right. So another thing I like to talk about is you just said it. A mentor of mine once said, he said, Tim, sometimes a good deal is getting out of a bad one. And so often we can't swallow we made a mistake.
You've already made the loss. The loss has already happened. It's on your books, even though you haven't entered it yet as an accrued loss, it's there. The difference is you need to realize it quickly so that it won't grow anymore, because it continues to grow. The quicker you realize it, the quicker it stops growing on you.
One of my favorite sayings in this business has always been, you can't rehab your way out of a bad buy.
That's true.
Right? Like, sometimes we want to keep pouring money into it, and you may get out of it or you may break even, but what opportunity did you miss?
It's a great concept. A lot of people talk about it, but rarely do people truly practice that. And I've started to look at everything I'm doing. What's my dollar per hour here? I've started doing that for the last 2 years, and I was starting managing multiple companies, and it's allowed me to affect money in a much faster, more efficient way. And if it's not important, I take it off my list. And until somebody sends me a notice, I don't care.
One of the most impactful statements anyone's made on my business mindset, almost from a point of validation, was I was in Manhattan one day having drinks with one of the gentlemen from Blackstone. It was when I was running B2R Finance. And we were leaving, and I asked a question. I don't even remember the question. I just remember the answer. And he goes, Tim, we know we can only be right 70% of the time. The key is acknowledge when you're wrong and stop doing it. And I think there's so much power, right? So here, they're the smartest people on earth. I'm just amazed at Blackstone. Like, I give them all the credit in the world.
Whoa.
But They're like, yeah, we can't be right all the time.
They know it. They'll at least admit it.
Right. Well, and the whole thing, and I love the culture. It was like fast executioners of even their own ideas, right? Because as an entrepreneur, a lot of times we have these squirrel moments and like, oh, I'm going to start selling water bottles. And, 5 minutes later, you're like, no, that was stupid, but I own 7,000 water bottles now. Like, go give them to the homeless shelter and just be done with it, right? Well, man, we're almost out of time. What I wanted to do, though, is just let's wrap up.
Okay.
We'll look into the camera here. Just tell the audience who you are, how they can get in touch with you. We'll put all your Instagram handles and all that on the screen when we edit this, but and how they can do business with you or get in touch with you.
My name is Logan Fullmer. You'll find me on Facebook under Logan Fullmer. On social media, or on Instagram, you'll find me as the Real Estate Junkie. I do have some links there, some of my education, some of the curative title work stuff. I started producing instructional videos on that. You can find those there. How to do business with us. If you have problems, contact my real estate office. It's either me
in
or
Texas only or nationwide?
Texas right now. Yeah. We're starting to look at other stuff, but mainly Texas. Just call the office, ask for one of the partners. There's guys there that'll get on the phone and talk about your problem and figure it out. We're not like attorneys. We're going to charge you for every moment. But what we'll do is, if it's an easy solve, we'll tell you the answer. I don't care. We love doing this, and we're servants to folks in so many different ways. So we'll help you. If it's a situation where the business case warrants that we should be involved, we'll tell you. And if we want to make you an offer for that position or we want to participate, we'll tell you right then too.
So there you go. You've got resources now and you've got a deal partner.
There you go.
Man, I appreciate you driving up for this.
Yeah.
I can't thank our guests enough for their time and energy. If you're listening today, pay attention to this man. Follow what he says. Be nice to yourself and believe in yourself. You've been listening to the Uncontested Investing Show, and I'm Tim Herriage reminding you your network is your net worth, and today you've been growing both. We'll see you next week.
Thank you for listening to the Uncontested Investing Show. Questions about today's episode or the podcast? Email podcast@rcncapital.com and make sure to follow RCN Capital on Instagram, LinkedIn, and Facebook. See you all next time. The preceding program is furnished by RCN Capital, LLC. The information provided is for general education purposes only and does not constitute any legal, financial, investment, or other professional advice. The views, thoughts, and opinions expressed of any speaker are the speaker's own opinion and do not represent the views, thoughts, and opinions of RCN Capital, LLC. No information contained in this episode should be construed as financial, investment, or legal advice from RCN or any individual, author, host, or guest. You should always consult a financial advisor before investing.